It's Wednesday, so YieldMax announced their distributions for this morning for Group B. Overall, we can see just hit these quickly. PLTY very good, 328. Babo very good, 189. Overall, these all look pretty good, except for FBY pretty low at 30 cents. But Maro $1.57, GDXY over the buck, NVDY almost 80 cents, JPMO 42 cents, Dip 16 cents, MRNY very good at 12 cents almost. Then ULT 9 cents. These are the weeklies. YMAX, YMAG, 14 and 21 cents respectively. SDTY, 16 cents. QDTY, GPTY, 24 and 30 cents respectively. RDTY, 36 cents. Chippy, 43 cents. LFGY was over the 50-cent barrier at 51 cents. And Salty at 61 cents. Jumping into these from a percentage basis. So I added these to my spreadsheet here. Specifically, we want to look at Group B. So I'll jump into that one. And so Group B, if we filter based on percent return, we can see Babo was the highest at almost 10%. And really, if you look at a cutoff point of 5%, NVDY was almost 5%, 4.77%. But most of the group was over 5% for the month, very solid. PLTY 5%, GDXY 5.6%, MRNY 6.28%, Maro 7.75%. So all these are stellar from a percentage basis. The only one that was, you could probably say it was a laggard, was Facebook at 2%. So 30 cents on a $15.33 ETF price. But so that's your breakdown for Group B. If you're looking at Group B overall, just from a breakdown of size, a lot of the Group B ones are pretty big. Because if we look through this list, we can see there's Facebook and GDXY here. We are just about 170 and 190 million respectively. And then NVDY, of course, at 1.8 billion. But then if you look at these other ones here, you got Maro in there. Got to try to find where it is. There it is, almost 120 million. MRNY is over 100 million, slightly. Then looking through it further, you got Palantir, of course, 667 million. And I think that rounds it out, but a lot of pretty big, or I guess what I'm trying to say, Group B is a pretty big group from an overall ETF market cap perspective, and they all paid very good on the week. But diving into these further, I guess the ones I want to cover today, I want to look at NVDY, of course, Palantir, and then actually just look at MRNY really quick. I know that one's not a very covered one, and then finally end on GDXY. I will put the link to this website in the description, so if you want to follow along with any of the other ones, feel free. But those are the ones I want to jump into right now. Look at NVDY here quick. We can see that here's the compare stack, and this is on every one of the ETFs. I don't want to mislead anyone, of course. I want to present how these YieldMax funds are doing, what your total return is looking, and then also compare it to other options. So one example would be NVIDIA. If you would have bought $2,000 of the YieldMax fund with no reinvested dividends, you would have done pretty well. You would have turned 2,000 into, and the starting date was the middle of 2023. So this is not a year. This is over 2 years, 2023 to 2024 to 2025. So just over 2 years, you would have turned 2,000 into $5,192. If you would have reinvested your dividends, you would have turned 2,000 to $7,316. But if you would have bought the underlying equity, you would have turned 2,000 and 13,000. So these YieldMax funds do offer income, but sometimes when they cap that upside, you do cap some of the potential blowout returns that the underlying equities can afford one. That said, the YieldMax funds, I guess my opinion of YieldMax funds offer a good income opportunity. Sometimes they should be mixed with either owning the underlying equity, or I guess my favorite would be owning calls, long-dated calls of the underlying equity if you're really bullish on it. Call options, you can buy leaps that go out almost 1 or 2 years. So sometimes you buy a call option, then if you want to pair that with income, you can buy some of these YieldMax funds to give you some income. I'm just suggesting options that one could consider. But sometimes the explosive upside of the underlying equities, particularly during this last 2 years, which has been a massive bull market, you can see where some of that capped upside can lead to some muted returns relative to the underlying equity. That said, I like the YieldMax funds from a distribution perspective. If you look at NVIDIA, since its inception, it's paid to average about $1.16. Of course, lately it hasn't been as high. Those really blowout implied volatility days occurred at kind of early 2024. But this month was almost 80 cents. You can see it's better than last month, in line with where it has been lately. It'd be nice to get one of those really big dividends again, like in May, $1.62. But overall, it's been a pretty good performer. You can see this is the total return, assuming no reinvested dividends. The ETF price recently was about 17. So far, cumulative dividends have paid almost $35 a share, so pretty good from that perspective for those who are looking for the income potential on these funds. NVIDIA, I'll just jump into this briefly. On my site here as well, I got what this fund currently holds. So you can see the stock price about 188 following market open. It is up a little bit today, so the black line should probably be closer to 188. But at the end of the week, they got calls sold at 192.50, 195, and 197.50. So that's what they're structured. They do got a credit spread. So they got calls bought at 200 and 202.50. That said, if the stock does not hit, these will go to zero in value and you'll get to keep all the premium. But that's how you're structured for NVIDIA shareholders. The fund makeup right now is, we do got a lot of money in that synthetic still, so that can be cashed out and increase our cash position, maybe pay a pretty good distribution in the future. It's always nice to see that synthetic have value in it. Usually when the synthetic gets too much value, the fund managers will restructure the synthetic. So currently you can see the synthetic is, they got two of them. One's at 165, this red line, and then one is at 170. So when the stock price gets way kind of percentage-wise quite a bit above those, the synthetic will have a lot of value in it. They can usually restructure that. What that means is they will sell their synthetic position at 165. They might move it up to 185, for example. By doing that, you move the strike price up, but you take in a lot of cash. That cash, which in addition to selling calls on a weekly basis, can be used to pay good distributions on these funds. So that's what I'm looking at when I'm looking at the fund makeup per share. And then their synthetic right now, they're doing credit spreads about 74% of what they have sold. Yeah, so that's a breakdown of NVDY. PLTY had a good distribution again. Once again, this PLTY opened at 50 a share, so it's on an apples comparison to NVDY, which opened at $20 a share. But the distribution from a percentage basis, as you saw, was pretty good. But $3.28, better than last month. Back in August, August they had that $7, almost $7.50 month, which is phenomenal. But $3, once again, this has been a good payer on a total return basis. No reinvested dividends. The ETF price is actually worth more than where it started. So it's $6.50 went to $65. And then you've also received $54 in cumulative dividends. So I don't think anybody can argue this hasn't been a good investment. That said, investing in, of course, Palantir, the underlying equity, would have turned $5,000 into $23,000. So it's been a good return for the YieldMax funds, not as good as the underlying equity, but that can be expected in a massive bull market. The capped upside will limit your upside if there's huge moves higher. And with Palantir, of course, there have been huge moves higher. So I wanted to point out those scenarios. Yeah. And then take a look at what they own at the moment. Give that a second to load. If you go to the first tab here, positioning, Palantir is 182.60. So about where the black line is. It hasn't moved too far today, but it looks like they got a lot of their calls sold at the 192.50. So the 192.50 is where they got most of them sold. But they got credit spreads employed at 195, 197.50, and most of them at 200. They got a little smidgen here at 190. Interesting strategy. They first started selling them at 182.50. So I guess those first ones they sold are just starting to go into the money. Slight capped upside that the PLTY fund will experience relative to PTR. But most of the capped upside won't happen until 192.50 for those who are looking to track the performance on these funds by tracking the underlying equity. Fund makeup right now, that's on a total, on a per share basis, you got a pretty good synthetic value, $8.29 in synthetic. So of course that can be cashed out to pay, once again, a really good distribution. They paid a good one now, but the distribution is really up to the YieldMax team, what they want to pay. But they got a big cash buffer sitting in that synthetic of $8.29. Synthetic, basically they're doing 100% credit spreads. So every call they sold, they're buying a higher one at a higher strike price, basically. And that's PLTY. MRNY, this one's not talked about very much. It's been a terrible performer, ETF price. But if you look at it, here would be an example of where these YieldMax funds can outperform an underlying equity when it goes down. So when underlying equity goes up, like Palantir and NVDA shows, the YieldMax funds will underperform. However, you can see here, Moderna has been an underperformer. The underlying stocks here in yellow, if you would have owned the underlying stock, the YieldMax fund with non-reinvested dividends, that's probably the key, is outperforming it significantly. It went from 2,000 down to 1,354, but if you would have owned the underlying equity, it went from 2,000 down to 719. So there's the give take for those who are doing the risk rewards on these funds. They provide good income. They won't keep up with the underlying equity in a very good market, but they won't lose everything in a bad market, assuming no reinvested dividends. So whenever you get the distribution or the dividend, I guess it'd be called distribution, but one should know that only reinvest it if you have a good underlying thought process or where the underlying equity will go. If you just want to take the distribution, and I know some people might live off them, that's fine. But if you want to reinvest it, sometimes I want to automatically turn drip on. Usually it's probably a good decision to do that, but it might be better to take them, and if you want to keep holding these funds, put it put your YieldMax fund in a YieldMax ETF where you think the underlying equity is going to perform the best. Because if you do reinvest your dividends into an underlying equity that goes down, the reinvested dividends actually looks like they actually performed worse than just owning MRNY, the stock. You took 2,000 down to 625. So just want to point that out. But lately, MRNY has been paying 9, 7, 11.5 cents on a ETF that's in the $1.80 range, I believe. And if you look at the total return metrics, assuming non-reinvested dividends, of course, not very good, but maybe in the last month or so, looks like we're starting to go on an upward journey. Maybe that's a stretch, but we'll see. But yeah, overall, I just want to say the percentage return this month wasn't too bad. And MRNY, if you want to look in depth, of course, this is it's actually a bigger fund than I thought. It's over 100 million. I would not have guessed that. Just thinking that it'd be in one of the larger or the top half of the YieldMax funds in terms of overall market cap. Maybe it's because it's $1 or $1.89 a share if you can get a lot of shares. But so Moderna's trading at 28, so probably about a little higher than the black line, getting close to the 28.50 where they got their first calls sold. They got them sold at 29 and 29.50, and then they got them bought 30 all the way up to 31.50. And then the fund makeup right now, we got a little bit of value in the synthetic. On a per share basis, doesn't look like that much. It's only 16 cents, but the ETF price is only $1.82. And then synthetic wise, they are doing 100% credit spreads. So Moderna or MRNY fund holders, that's what you're looking at. And then the last thing I want to jump into, GDXY has been on a tear lately. GDX, gold miners ETF. Gold has been, as you can see, here's the underlying stock price of GDX. It's been on a straight upward journey lately. Gold actually is above 4,000 at the moment. And you can see it's all been in the last 3 months or so. It's just been shooting higher. For the most of the fund's period, GDX has been somewhat stable. But yeah, the distributions as well have been trending higher. As you can see, they've been usually around, what do you say, the average was about 50, 60 cents. But then the last 3 months, they got 60, 64, and then this month, first time over $1 for GDXY. So maybe that's one some of you would like to consider going forward. Details of the fund, give it a second to load. We got positioning. We got GDX at 78.18, so it continues to go higher today, up another 1.57%. The stock price, we just did hit the 78 strike, so you'll see a little bit of capped upside. When I say capped upside, what I mean is if GDX goes up 2%, GDXY might only go up 1.5% when you start getting those capped upside. You hit the most of it at the 79 strike and the 80 strike. But then when you got the credit spreads, if you go over 82 or 83, then that capped upside is taken away. The GDXY will follow GDX 1-for-1 in terms of percentage basis, or it should at least. Usually, so the capped upside, of course, you give up the capped upside in order for the distribution. So that's your give take on these funds. So that's what you're looking like for strike price on the GDX fund. And then currently, I'm guessing, yeah, there's a pretty good amount in the synthetic, $2.47. Synthetic's always your buffer that can be cashed out to pay the distribution as long as the weekly contracts that they sell for underlying ETFs that go higher. Then from a synthetic perspective, they are also doing 100% credit spreads. The last thing I want to note, just GDX, why is GDX going higher? I'm looking Yahoo Finance quick. Gold's over 4,000 as part of the debasement trade. This is why I would consider myself a Bitcoin bull. I wouldn't call myself a Bitcoin bull. I would say I'm more a fiat currency bear, because the fiat currency, every nation, including the US, is just printing money after money to pay for these deficits that just keep going higher. And people are finally thinking gold's starting to go higher because of that trend. It seemed like it didn't kick in for the longest time. Then all of a sudden, boom, here we come. Gold's going higher on the debasement trade, which is investors pouring hard assets into crypto to hedge against what they see as the erosion of fiat currency, driven by inflation, heavy government spending, and mounting debt financed solely by money creation, which is a circular trend leading into more inflation. So I don't know how we get out of this, but that's why gold's going higher. That's why I'm bullish on Bitcoin. And it's not just the US government. I mean, if you go on my site here, or I'll jump back, I do got a tab for just pretty archaic a little bit, but or maybe it will pop up. Give it a second to load. But tracking the US national debt, also, here it goes, finally pops up. We're at when I first started this, we were at 37.5 trillion. Since I started, we're at 37.8 trillion. So we put on $300 billion in debt since I added this to my site, which is insane. We're at 109,000 per person, or 283,000 per household. But that's just the debt. Then we got all these underfunded liabilities and Social Security, Medicare, prescription drugs. that the unfunded liabilities per person is 355, almost 356,000 per person, or getting close to the $1 million per household. In my opinion, just insane. This is the U.S. It's not just the U.S. Some other countries are actually worse than the U.S. from a GDP perspective. But because of this, we are finally getting to the point with this exploding debt that it looks like gold's going higher. I see Bitcoin going higher. That's just my own opinions, of course. But that could be a reason when you look at it why something like GDXY has been going higher. Maybe something to consider for some people who have these similar opinion bases myself. But anyway, that's just my own thoughts, just covering some of the news that's coming up. But that's Group B. Thanks for tuning in today.